This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Quality control. The International Standard on Quality Control, number 1, states that at the firm level there has to be a system of quality control. What we don't want is quality to be a matter of really good luck. If you get a good auditor, then you get a good audit. If you get a not quite so experienced auditor, then you won't get as good a job done on your audit. What quality control systems do is to more or less try to guarantee that whatever work is done by whoever does it in the firm, it is going to be of the highest possible quality. And it requires a system to do that. And a system is a bit like an internal control system, and indeed the quality control system of a firm of auditors is like its internal control system. How do we know that the working papers have been properly reviewed? How do we know that someone with the proper competence has been put in charge of an audit? How do we know that all the documentation required of the audit has been filled in? And you need a system. Basically, you're going to have, probably within the audit firm, people signing off bits of paper saying, yes, I've planned the audit. Yes, I have thought about the experience required of the team who should be on the audit, and they sign that off. Every time they review a working paper, they sign that off, and so on. So there's a complete audit trail of the audit, and that people have followed the rules, followed the checks and balances and authorizations and reperformances, all the normal methods of internal control to ensure that the audit has been done properly. We want reasonable assurance that, and here it falls into these two parts. First of all, really to do with the ethics, that personnel comply with appropriate professional and professional ethical standards here, that they comply with the international standards in auditing and so on, and also comply with legal and regulatory requirements. And then, really rather buried in the second one here, that reports which are issued are appropriate. And in other words, if you say on the audit report that the financial statements do show a true and fair view, there's very high assurance, reasonable assurance that that is correct, that something hasn't kind of fallen through the cracks, because our quality system basically is going to detect any errors which we as auditors are going to be making and try to correct those. But there's an awful lot going on in here. This is actually the doing of the audit in many ways here. This is the finding of the evidence. This is drawing conclusions about the evidence. This is making sure the evidence supports the figures in the financial statements. It means this is where we find evidence for the amounts and the presentation and the disclosure and the like. That's within the financial statements. So this is a bit of an iceberg, this one here. Reports issued are appropriate. It looks kind of very short, but this is where an awful lot of the work is being performed. It is the engagement partner who is responsible for quality, and it's important that the engagement partner, and indeed the partnership as a whole, fosters a culture supporting quality. And we've talked about this before, the idea of tone from the top. We look at it on ethics. We look at it on maybe preventing fraud. We're trying to make sure that everyone from the partners down is taking their responsibility for producing work of the highest possible quality. There are 6 key areas. First of all, leadership. The partners and then the managers, the engagement partners and so on, should be behind the drive for quality, and they should make it clear that bad quality is not tolerated within this firm of auditors. There is ethics. You cannot have a high quality audit if you don't have the ethics in place. How can you possibly do a high quality audit if you can't say that you are objective, or you don't spend enough time, that we're skimping on the due care element and the experience element and so on, which is important within that. How could you possibly doing a proper audit if you don't have integrity, or if there are self-interest threats or familiarity threats which are impinging on your independence? So ethics is not separate from quality. Ethics is not an add-on. Good ethics is absolutely fundamental to doing audits of good quality. There is acceptance and continuance. Do we want to accept this business? Do we feel competent in accepting this business? Are we a large enough firm of auditors to be able to deal with the 50 branches of this business, some of which are abroad and so on? Perhaps we started off doing good quality audits, but the business has expanded. It's gone into other rather specialist areas, and now maybe we feel out of our depth. And we have to think really every year if with even an old client we are still able to produce audits of the highest possible quality. We need to look at human resources, because at the end of the day it's people, it's the audit team and the managers and so on who are responsible for actually doing the work and for collecting the audit evidence. And we must make sure that first of all we have enough people, that we can send enough people to do the audit within the time that the client wants. We don't want to be making people doing outrageous hours of overtime, because they will get tired and begin to make mistakes and to miss stuff and so on. We have to make sure that they are competent. In other words, proper education and training is important. That they have the capabilities, perhaps specialist capabilities, to enable them to carry on audits of particular clients. And they, of course, must be attuned to the ethical standards. And then there's engagement performance. This is how you actually, in a way, get on whilst you're doing the engagement, whilst you're actually doing the audit. So we've kind of picked our team. That's, if you like, human resources, properly trained, educated team of the right experience and standard and competence. And then when they're actually doing the audit, you have this audit team. We want to make sure that people are given sufficient direction. Direction means, in a way, you're telling them what to do. And in, I think, the last chapter, we talked about fraud, and we talked about, well, the engagement partners should get the audit team together and they talk about the susceptibility to fraud. And that is kind of giving them direction. It's kind of saying, look, lots of cash in this business. It's susceptible to fraud. There is supervision. Typically, we have in an audit team is you have a supervisor, and then you have maybe 3 or 4 audit assistants down here. The supervisor might be someone of 2 years' experience. The audit assistants might be doing the first week, in fact. And it is essential that the supervisor supervises these assistants to make sure they're doing the work correctly, that they're selecting invoices properly, randomly and so on, that they are looking for the right things on documentation. And then what happens is the work of the audit assistants, it has to be reviewed by the supervisor, and then that's going to be reviewed by the manager, and typically it's going to be reviewed by the partner. So there's this whole sort of hierarchy here. They might review work at slightly different levels of detail, but certainly when I was trained to be an auditor, sometimes a partner would ask to see the audit file, and the partner would actually look at individual pages where you'd written out in detail the invoices you had selected and what tests you did on them. And at several levels this review went on. And if you find everything's okay, that's great. But if, say, the manager finds that maybe a piece of work hasn't been done to the right level, the manager's unhappy about it, then the manager will say to the supervisor, we need to go and get more evidence, we need to go back to the client, we need to do that bit of work again, because as it stands, it is not of the right quality. There will be consultation both within the firm and between the auditor and the company. Maybe we need to talk to the company really about certain issues, and dependent on the answer given by the company, then maybe we have to do some more audit work in a particular area. So if we find something that looks a bit like fraud, a little bit odd, and we talk to managers and they say, oh yes, I was worried about that, then maybe to do a good audit you should pick up what they say and go and look at some more documents to see if the audit is rather more, the fraud is rather more widespread than we thought. And monitoring. We have to monitor the quality control system. And what we're looking at here is documentation, really. In a way, quality control does not exist without documentation, because documentation is the proof that the steps required in enforcing good quality have actually been taken. So someone should sign off the audit plan. We've talked here about the individual schedules being prepared by the audit assistants. They have to be signed off. And it's these signatures as documentation which is then the proof, really, that the quality system has been followed, and therefore a better chance that a quality audit is being performed. Now you can remember many of the steps required in good quality by the word sacred here, or you might want to change it to scared, but it means that there has to be good supervision. There has to be the proper assignment to the audit, and proper assignment to the audit means sending people of the right experience and sending enough people to deal with particular audits. There has to be competence, and there has to be like education, which gives rise to the competence, as well as experience, which gives rise to the competence. We've talked about the importance of review what everybody else has done below you. Ethics, remember, ethics is an essential part of quality. And direction, telling people what to do, telling people how to do it, so they carry out the work effectively. Public interest audits. This means the audit of a public interest company, which is typically the audit of a listed company, or maybe the audit of a charity. It's where basically the subject of the audit, there are many stakeholders, or it's going to attract a large amount of publicity if something goes wrong. And what should happen here is there should be an engagement quality control review. This means that an independent partner should come and review the whole audit. So let's say the audit was being done in London. The independent partner may come, say, from another town in the UK, maybe coming from Manchester. So we're clear that this partner is independent of the engagement partner who actually did the audit. Occasionally you invite in partners from other firms of accountants to do an independent review. And what the reviewer will be looking at, they will look at the financial statements, they will look at the proposed report, the audit report. They will look at some of the auditing documentation which is going on and the working papers and so on, particularly the ones that the partner will recognise as being the more difficult ones to get right, the ones which involve judgment. They will assess that the people performing the audit and the branch of the audit firm, that there's sufficient independence there to make proper judgments. They may themselves consult with the client, particularly in areas maybe to do with judgment or other difficult areas. And overall, they want to make sure that the work done by the audit is enough and good enough to support the audit report, to support the conclusions. And if it's inadequate, then maybe some more work has to be done even at a very late stage. The review terminology, a peer review. Peer means someone of the right level, someone equal to you. A peer review means the audit is carried out, or basically the work of the engagement partner is going to be reviewed by another partner. And there are really two ways of doing it. You can have a hot review and a cold review. A hot review is carried out whilst the audit is being done, and it's before the audit is completed. And quite obviously this will give the opportunity to prevent a bad audit report being signed off, because before the audit is completed, if you see there's inadequate work, you say, go back and do some more work. A cold review, on the other hand, is really closing the stable door after the horse has bolted. We've signed off the audit report maybe 6 months ago, and now retrospectively we're saying, let's see what you did. This will not prevent that report from being wrong, but of course it may prevent other work being done by maybe the audit team and the partner from being wrong. The hot review tends to be a little bit disruptive because people are trying to do the audit and use the audit files and fill in the audit schedules. Yet these other people come along and say, I need to see these audit schedules. They kind of interrupt the flow of the audit a little bit. But it's sometimes requested actually by the engagement partner, even if it's not scheduled, sometimes requested by the engagement partner if they're particularly worried. And even though you have to carry on the review engagements, the quality review engagement reviews, you have to do it for public interest companies. You can request it for other companies, of course. This is a kind of an area, this review, which has actually got better with more modern auditing techniques. It used to be everything was kind of done on paper. The audit file was on paper. And when you got a call saying that a particular audit was going to be reviewed, the manager of the audit would go through all of these bits of paper, making sure they're all signed off and completed, and kind of maybe signing them off retrospectively, which of course wasn't great. Now most audit working papers are held electronically and can essentially be locked. So the papers, the audit documentation is locked, and then the review is done. And so you see the audit, if you like, warts and all, before anyone can improve it. Audit documentation, very, very important for all sorts of quality. We talked already about you have to document the steps taken in quality control, but you have to document the audit, of course, itself. This will show planning. It will demonstrate, it is your evidence that the audit work has been done properly. It's the only way you can enable senior people to review what junior people have done, if what they've done has been written down and documented. It helps people in future years because they can look at this documentation, see where the difficult areas were and see how they were perhaps solved. It encourages a methodical, high quality approach. Typically what you have in some of the documentation is you've got basically a form, and it's saying, look at the invoices. It's saying, match the invoices to the order. It's saying, add up some invoices to make sure they're correct and so on. And over here, you sign it off. So you have written out in the audit documentation, the audit program as it was called, the steps you have to follow. And then over here that the person actually doing it signed it off. So you have this record that the proper steps were followed. And then again, when the external audit partner comes through doing the engagement quality control review, they can go through and make sure this audit documentation is also complete.